Good morning, everyone. It is Monday, January 25th, and we here at Harvested Financial are looking at the markets. Thank you, everyone, for joining us today. I will just go through some brief disclosures before we pull this up. So, just a reminder that all the information, commentary, and opinions expressed on this or any other websites or on any social media platforms or in any media format reflects the personal opinions, viewpoints, and interpretations of the employees providing such comments are not considered to be a description of or offer of advisory services by Harvested Financial. The opinions expressed are for general informational purposes only and not intended to provide specific advice or recommendation for any individual on any specific security or investment product. It is only intended to provide education about the financial industry, and in no way is any content on this website meant to convey investment advice, performance data, or any specific recommendation to buy or sell securities. Harvested Financial employs multiple methods of analysis on security selection to create our client portfolios, which are not discussed in their entirety here. All investments carry the risk of loss, and users should discuss any decisions with their financial advisor. Past performance is not a guarantee of future results. So what do we have as we are looking at the markets today on Monday? Well, we have SPY up $1.32, that's 35 basis points. We have IWM right around flat, that's only a basis point up a couple pennies. And we have the Qs leading the charge up $4, 1.4%. So big week this week. We got a lot of earnings coming out. We got a lot of interesting things moving around in the market. So I want to take a tour through AMD and talk to you all about what's going on here and how we might be able to play their upcoming earnings. So if you'll recall, earnings in AMD are coming out tomorrow after the bell. So where do we think this stock could go and how do we want to play it? Well, I'm going to pull up a chart so we can look at that first. And I'm focused on some of this price action in here. So the last 2 months, we've been bouncing between 98 and all the way down to 88 at the low here, kind of a little bit of floor, just been bouncing around right in there. Implied vol is, let's pull up the implied vol compared to the historical vol. So implied vol is my white line right here. Historically, that implied vol has been, or I shouldn't say historically, the average 30-day implied vol has been trending around 60, and the historical vol is quite a bit lower than that. Right now the 30-day historical vol is only around 42. However, when I pull up my earnings, numbers, if I'm looking at the options expiring just this Friday, so just 4 days away, I see 100 vol trading out there. So we got 100 vol going into this earning event. Steeply after that vol is going to come out, but people are expecting a big move. I was looking at some of the comments from analysts this morning, and Intel had some pretty bad earnings last week, so people think there might be some spillover effect. But people are also, looking at where AMD has gone over the past 6 months, and it stocks up tremendously. I can pull up that chart actually. So while we have been in that range a little bit recently, compared to where we were 6 months ago, and stock was only trading around 50. So stock's almost doubled in the last 6 months. So people are attributing a lot of that to the fact that AMD has been catching up to Intel and has been outperforming them. And so this has been Intel's game to lose for them. That might be changing. We've seen some changing in the guard in terms of CEOs over at Intel, but how is AMD going to perform going forward? Well, mostly concerned about this earnings, and one of the ways I want to do that is looking at a butterfly trade. These are some of my favorite trades to do here at Harvested Financial because it's a great systematic way to capture some of that volatility risk premium. We like to provide capital, provide that sort of liquidity to the market by selling some of this volatility and capturing some of that premium that's bid up for earnings. So things can always move though, so that's why a butterfly is a great trade because it lets you define your risk. So I'm going to go ahead and sell 2 of the 95 calls. That's right at the money. Stock's trading right around 95 right now, just under. And then I'm going to cover this on either wing. So I'm going to buy the 90 call to protect myself on the downside. I'm going to buy the 100 on the upside. So I have a nice 10-point butterfly right here. And for this 10-point butterfly, the most I can make will be when stock sits right at 95, and I will make $5 a contract there. That's because the long call spread that you have going from 90 to 95, that will be worth the most amount of money, and your short call spread that you have from 95 to 100 are worth the least amount of money. So that is going to occur right at 95. And I will make the $5, which comes from the lower vertical that you're long. You're long the 90, short the 95. short the 95 again in your next call spread that also caps you out on the upside by buying that 100 calls. So I can enter this trade for about 85 cents right now as the midpoint. The offer price is up at 98 cents. And as we always say, execution quality really matters. There's 14 cents of additional edge that you could get there. So improving your trade price by up to that 14 cents, getting all the way down to midpoint, would really add a lot of difference here. So do you acquire this at 87 cents or do you pay that extra $10 a contract and pay up to 97 or 98 cents where it's offered right now? So execution quality is really going to matter, and that's going to compound across every single contract that you try and do. So I always love to pull up the what ifs too. So thinking about where we're going to make the most money. So we're going to make $500 if it sits right at 95, and then subtract the 85 cents that we paid for this. This is actually pricing 89 cents. So our total P&L on the trade would be pay 89 to win 500. So a net profit of 411. Our cost on the wings, so above 100 and below 90, that's where we're going to lose. And we only will lose the debit that we pay to get into this trade. So 85 bucks a contract, 85 cents in per share terms. And our break evens are going to come in pretty quickly. So we're going to break even right around, let me get my arrows in here. So that first break even is going to be 90 plus the debit that we paid. So starting at 90.85, we start to make money, and coming in from 100 at 99.15, we're going to start making money. So we have almost a $9 range right there where we're going to be profitable on this trade. So assuming AMD is going to sit in that nice little channel that it's been sitting in for the last 2 or 3 months, this is a relatively odds-on trade where you can almost 4x or 5x your money by putting down around $85, $90 and earning up to $410 on this trade. So earnings coming out Tuesday after the bell. Butterflies are a great defined risk way to capture the extra earnings volatility, make a play on AMD just sitting where it is, but really defining your risk should we see an outsized move there. So Harvested Financial, we excel at these strategies. These are the kind of systematic strategies that we're putting on for clients every single day as we rotate through and capture opportunity, capture volatility premium, and capture direction from the options market. Check us out on Twitter at harvested_DAFE, and that's because derivatives are for everyone. Mash the subscribe button here on YouTube. We're turning out the daily bread every morning. Trade ideas, 8:35 Central, 9:35 Eastern. Make sure to tune in, and thank you very much. We appreciate you joining us and look forward to